Hello, everyone, and welcome back to the Pulse here with the PeakBot team. I am Dillon, joined by my co-founder and co-host here, Ben, who's rocking a fresh haircut this week. I don't have a fresh haircut, which is why I have my hat on, although I always have a hat on. But excited to get into another week of trading here. All things option selling from our watch lists. We'll take a look at a couple charts. We're going to talk through our trend spread bot. We're actually going to also review our new iron condor strategy. When I say new, I mean it is in the works. It is being tested. It is not live on our platform yet. And we'll also take a look at my portfolio and some changes I'll be making this week. And Ben's actually going to be a pal and take a closer look at some of my trend spread positions that I've been rolling for a few weeks now. And we're going to chat through how to manage those positions more properly. We want our traders who are live on beta with trend spread, as well as those who are anxiously awaiting the arrival of the trend spread bot on our platform to know how to best manage the strategy when you're constantly rolling. So that's what we got on the agenda for today's show. Excited to get into it. I'm going to kick it to Ben here, and he is going to take a closer look at, I believe, Tesla and Meta as we're coming out of earnings on those, correct?
Yeah. I mean, we'll get into that. I'm going to share the watch list real quick just to cover that in a short amount of time. So for anybody new joining us, this is our watch list for the wheel option strategy. If you don't know what the wheel option strategy is, you basically start by selling cash secured puts. If you get assigned shares at expiration, you would then go ahead and sell covered calls on those shares. At PeakBot, we automate this process. We actually sell weekly options, so we'll get you into a position on Mondays, and then that position will expire mainly on Fridays. Markets close on Fridays, then on Thursdays. But the idea here is we're collecting weekly premiums. You could trade this strategy manually if you'd like to. I just like to automate it because I don't have to worry about it. I can get on with my day, get on with work, get on with family, friends, whatever it is, and have this automation running for me, placing trades on my behalf. So great tool to have in this watch list that I have on screen here. This is one of the key tools, if not the key tool, that most, if not everybody that's using PeakBot will leverage. And even people not using PeakBot use this watch list. We've heard a lot of action on people who aren't using PeakBot using this watch list to help them make their own trading decisions. Emphasis on your own trading decisions. We're not financial advisors, not financial advice. We're just providing tools to hopefully help make the world of trading easier for the retail trader. Now, with all that out of the way, wanted to mention we are still in the middle of earnings season. So if you're on this watch list and you see a blue flag on a date, that means there are earnings coming up for that company. Now, we had a lot of earnings report last week, and I want to specifically talk about Tesla and Amazon. So Tesla, first time I think ever where they reported earnings and the stock shot up at least that much. And then Meta was interesting because their numbers came back pretty good, but on the earnings call, Zuckerberg basically just talked about how much cash Meta was burning, and the market seemed to react accordingly. So we'll take a look at those in just a minute. But yes, just want to reemphasize that stocks that are reported, companies that are reporting earnings may be paying a higher premium this week. Meaning, if you trade, for example, let's look at Marathon. If you trade Marathon this week, we're estimating that of the $2,600 in cash you need secured, you'll earn about $13 on that, about a 0.5% return on your premium to your cash secured. That might not always be the case. Earnings causes higher volatility, or at least the perception of more risk. More risk equals more reward. If you were to come back and look at Marathon next week, might not be the same story. In fact, if you were to look at it last week too, it might not have been the same story. So just a word of caution when trading earnings. I know myself and Dillon, We like to avoid earnings as much as possible. And we could say with a relative strong amount of confidence, for example, like BP, ticker BP here, number one on the watch list this week, paying out 0.71% in premium. No earnings, reported earnings back in February. Unless there's some sort of monumental expected news release, there's no reason for this to be out of the ordinary. So we like to trade tickers that are expected to pay these higher premiums each week, and we're also protecting ourselves from downside by creating a spread. And that's where you could see what the spread is here. You can see the max loss. So we know, like in this position for BP, our max loss here is going to be $100. And that's only going to happen about 10% of the time, because what we're doing, and I'll scroll to the right here a little bit, we're selling the 30 delta, at least on the put side, we're selling the 30 delta and we're buying the 10 delta. So selling the 30 delta statistically gives us a chance of winning of about 70%. So the equation here is really easy. Just take 100 minus the delta, and then that's your estimated percent chance of that particular scenario happening. In this case, sold put, we want to expire out of the money. The 30 delta is indicating that there's a 30% statistical chance of expiring in the money. So we want that 70% out. Now for the bought put, and this is how we form our hedge and form that layer of protection and call it an insurance policy, if you will. We are buying the 10 delta, which again means there's a 10% statistical chance that that contract will expire in the money. And in this case, we don't want that to happen, because then we would have lost all the value from the sold put. We would have, that hedge would have triggered from the bought put, and we'd be looking at our max loss of about $100. So again, this might be a lot of info. Luckily, PeakBot handles all of this mathematical calculation for you. You don't have to do it yourself. If you wanted to do it yourself, though, I'm going to show you how, and I'm going to relate this over to our trend spread strategy, which is very similar to our wheel strategy, where we're still selling the 30 delta and we're buying the 10 delta, and we're doing that on both the put and the call side. If you notice here, there's a column we've got labeled as trend. We've got bullish, we've got neutral, and we've got bearish. So the way that the trend spread strategy is set up right now, and this is in beta, not available for everybody. It's in beta right now. If you are on PeakBot and you are interested in trading the trend spread, and you want to join this beta group, just shoot us a message. We'll throw up a phone number on screen. Just shoot us a text, say, hey, I want to try out the trend spread strategy, and we'll get you on there. So we're selling the 30 delta, we're buying the 10 delta. How do we decide if we're going to sell a put credit spread or a call credit spread? Well, that's based on the trend. If we're in a bullish trend, if PeakBot determines that we're in a bullish trend, then we are going to sell a put credit spread, because that's a bullish to neutral strategy. If we are in a bearish trend, we're going to sell a call credit spread, because the value of that call credit spread will increase over the course of the week as stock prices decrease. So we're looking for a slowdown in price, or this is a bearish to neutral trend. Now, if a ticker is neutral status, right now, what we will do is sell an iron condor. So both a call credit spread and a put credit spread. We are considering updating this so that way neutral weeks we just sit out, and that's based on the success that we've seen trading iron condors with the trend spread strategy. Sometimes the best trade is no trade, right? So enough of that. I'm going to hop over to our charts here. I'm going to open up my Tradier account. I want to look at Tesla, and I was looking at Tesla's chart before, and it's in a longer term downtrend. And I'm going to zoom out a little bit to a 6-month chart. We can see that there's a downtrend here. Now, they just reported earnings last week. For anybody who plays earnings, knows that Tesla could go in either direction, really, really strong. It just happened that Tesla went up last week. So for option sellers, again, reemphasize, we don't really like to trade earnings. There's no real upside for us to trade earnings. It's not like the further the stock price moves in one direction, the more beneficial it is for us. That's really not the case. We're just looking to collect premium. So it's more beneficial for us to not play earnings because we can only just get ourselves in more trouble. Again, there's no real upside. So Tesla overall in a downtrend. I'm going to take a look at the technical analysis tool for the week. It looks like we've got 14 sell signals, 9 neutral, 3 buy. So if we're sticking with this bearish trend, which we're seeing on the chart, we're seeing in the technical analysis tool, we're going to be selling a call credit spread on trend spread this week. So I'm going to go up here. I'm going to click on chains. I'm going to open up ticker Tesla. I'm going to make sure my expiration is set for this Friday, which is May 3rd right here. And then what I'm going to do is I'm going to stay on this right side because that's, I'm sorry, we're going to be on the left side. We're selling a call credit spread. So I'm going to go look through this column. I want to see where the 30 delta is and where the 10 delta is. And Dylan, get your calculator out because we're going to calculate what the expected premium could be. So I'm going to scroll down, keep an eye on our strikes in the middle here. We know that Tesla is trading right around this price level, and you can see that it's indicated by the change in color here. So the grayish color indicates out of the money, the white shading indicates in the money. So again, looking at this delta, what we're doing is we're looking for the delta that is closest to, but less than, on the call side, less than the 30 delta. So that's right here. So we would be selling the 177 strike. And by doing that, we would earn an estimated $1.88 in premium. So Dylan, can you plug in $1.88 to your calculator?
Yep.
And now we're going to buy the delta that is closest to and less than the 10 delta. And that puts us at the 185 strike. So we're selling the 175, we're buying the 185. That creates a $10 spread, which means our max loss here is $1,000 per spread that we're selling. And it looks like we're going to have to pay, and this is our insurance policy, so we're going to pay back some premium. We're going to pay 45 cents back. So Dylan, if you did 188 minus 45, what do we get there?
$1.43.
$1.43. So that means for every contract or every spread that we're selling, we're going to be earning about $143 worth of premium. If Tesla finishes below 175 at expiration by end of day on Friday, we're going to keep that entire $140 something premium and move right into the next week. So that's how you could kind of calculate what your expected premium could be. You could do this on any ticker, honestly, even if it's not on our watch list. Just look for the deltas and then know that the closer you are to the money, that's the strike that you're going to be selling. The further away you are, that's the strike that you're going to be buying. Now, if you were less risk averse and you didn't want to set up a $10 spread, you could manually adjust, right? If you're trading this manually, you could sell the 175 strike and buy the 180 strike, right? You'll just be paying a little bit more back in premiums and earning less in net premiums. So all decisions to make, it's up to you and your risk tolerance and how exactly you want to trade. So, Dylan, any questions on Tesla before I move over to Meta?
No questions. I think it just may be helpful for some traders who are newer to options to understand, when you're looking at that options chain, maybe this is obvious, but when we say $1.43, that's per share, right? Which is why when we're trading an options contract and there's 100 shares of that stock being traded within that contract, that's why you're multiplying it and getting $143 in premium. So when you look at that and you see $1.43, that's not what you're making. You got to multiply that. That's per share. So no, I think and in that latter situation that you pulled up for the $5 spread, that instead of making $143 in premium, that would have taken home $96 in premium. So,
$96 on a $5 spread. So your max loss $500.
Yep. And again, just beware that the delta, again, we're going the closest to our preset deltas without going over. So always look for that. And when we say we're selling the 10 delta, don't be looking for the number 10. You're looking for 0.0 in this situation 0.9.
Right.
We're moving the decimal over 2 spots. So just keep that in mind.
Yeah, no, great point, Dylan. Yes, if anybody has any questions as well, feel free to post them in the comments thread. If you're on YouTube, Twitter, whatever platform you might be on, we've got all of them up, so we'll see your question and we can answer them live. So let's hop over to Meta real quick. I'm taking a look at the 6-month chart here. Meta is in a bullish trend, and I've confirmed that with the 67-day EMA. Now, Tesla and Meta, you won't find those on our current wheel watch list, but we will be having the trend spread watch list out either next week or the week after. We'll figure that out internally and when that makes the most sense. Dylan, can you still hear me? I see my face is frozen. I don't know if
your face is
you.
frozen. I can hear you. Luckily, it's not a silly. Oh, you're coming back. But yeah, you're good. Your audio's good.
All right, I'm going to take a look at the technical analysis tool. Looks like we're almost dead neutral here. We've got 8 sell signals. We got 10 neutral. We got 8 buy. So not as, according to our technical analysis tool here on Tradier, not as strong of a trend seemingly as Tesla was in. But again, if we're in a bullish trend on the chart here, and then our technical indicators are indicating somewhat neutral, selling a put credit spread is a bullish to neutral strategy. So in that case, that doesn't appear it would hurt us too much in this scenario. But let's see where we would actually set our strike prices at. So again, I'm going to go to chains. I'm going to type in Meta. I'm going to make sure that I'm on this Friday's expiration date. And then I'm going to scroll down to where Meta is currently trading at. And now we're on the put side because we're selling a put credit spread. We're in a bullish trend, bullish to neutral trend. And I'm going to look for, now the deltas on this side, same concept. There's just a negative number in front of them. So just ignore the negative number and all of the same concepts apply from the call side. So I'm going to find the closest to, but less than the 30 delta. So I've got this 0.298 delta here. And that's at the strike price $432.50. So Dylan, can you put $4.10 into your calculator? Because that's the estimated amount of premium that we would collect. And then I'm going to look for the 10 delta. And I see it's right here, exactly 10 actually, 0.1 here. And that's at the 415 strike. And so Dylan, if you could take that 410, a premium we've earned, and then take the, we're actually going to do $4 for the premium that we have to pay back. That's going to be the expected premium earned. What does that come out to be?
$3.06, which translates to $306 in premium earned.
Awesome. And then the spread here is $12.50 between 415 and 427.5. So that's roughly a max loss of $1,250. So if you do that math, I'm not sure what that calculates out to. So Dylan, if you did the $3.06, divide that into 1,250, what percentage return does that give us on the week if we were to expire out of the money?
So I'm getting 0.002. I did something wrong.
Yeah, I don't think that's right. What was it? 300 and what was the premium?
Okay, so you know what I did? I did the dollars, the $3 instead of the 300. So you want me to take $306 divided by the 1,250?
Yeah, it should be something like 25%.
I'm seeing 0.244.
Okay, so 0.244. So that's a 24.4% return premium into your max loss here. So risk reward, you're going to win this statistically 70% of the time. And when you win, you're going to win about $300 or so. When you lose, you're going to lose about $1,200 or so. So just important things to think about as you want to trade this strategy, either short term or long term. Know what that risk reward ratio kind of looks like for yourself. So that covers Tesla and Meta.
Ben, I
Dylan, do we
had
want to head over to your watch list?
You know what? I had one other chain I'd like you to look at, because when you pull up the watch list super quick, and then I'm gonna have you jump back here at the top, very top. This one was I thought was interesting because I don't normally see this. If you look at BP, the current stock price is 39.47, which is actually listed below our
Okay.
sold put strike at 39.50. So I was like, that's weird. But then when I go and look at it on the chart or on the chain, which you'll pull up now, to me, to the naked layman eye, looks right on the chain. So let's take a look at this and see if this is just kind of an anomaly.
Yeah, and it could be that there just hasn't been any action on the BP options chain this morning. I just wanted to see what the pre-market prices were. Pre-market, it's trading below what the Friday close was, so that's not necessarily a factor. I'll pull open the chain and make sure that we're on Friday's strike or Friday's expiration. And what are we looking at, the put side?
Yes, looking at the put side.
Yeah, so the delta here, you're right. Yeah, so this will update. When the market opens, I would expect, I don't know, the strike price to probably land somewhere around like this 38.5, and then maybe the spread is at the 37.5. But we'll have to see. Sometimes options chains won't actually update until the market opens. And that's typically found on chains that are a little less liquid. Now we are pulling the top 150 or so most liquid chains, but there's still some chains in here that just don't have the same type of movement outside of market hours as others. Like Tesla, for example, is one of the most highly traded options chains, most liquid options chains, and people will be adjusting their bids and asks, when the options market is closed. Might not be the case here for BP.
Understood. Okay, very cool. And by the way, just before we move on, and yeah, I'll take a look at my portfolio here. We'll pull up my screen, but to David in the comments, quick FYI from him, Tesla is up 12% pre-market. Thank you for that information. Very helpful for anybody looking to trade Tesla. So yeah, I will. You want to take a look at my portfolio and some of the changes I'm making?
Yeah, let's do it.
Do it. So here's my PeakBot account. Again, for anybody new to the stream, new to our show, PeakBot automates option selling trades on your behalf. We're placing the trade for you. It's integrated with your broker. We're connected, of course, with Tradier, as well as other brokers that you may be very familiar with and already trading on. So let's take a look here. So look, it's no secret the market's been, I'll call it from my seat, misbehaving. My account's kind of been in a rut the last few weeks, but I'm starting to recover. So my account balance, just so everybody knows, and I post my updates on my account balance every week on Twitter. Right now, my account's at $13,553, so $13,500 roughly. So when we take a look at my account last week on the wheel strategy, okay, and for those of you who aren't familiar with the wheel strategy, time-tested, well-known, been around for decades. We're selling puts until we get assigned shares, and then we're selling calls on those shares until they get called away, and we start again at the top. So with AA, Alcoa Corp, I sold actually 2 put credit spreads on that last week. I'm rocking with it. If we take a look at it on our watch list here, let me just search Alcoa. So AA is bullish moderate. This is kind of right in my wheelhouse here. It's trading at 36.88. We're in a bullish trend. Moderate risk, which is based on the size of the spread, which is just a $2 spread. My strike prices are, my sold put is 35.50. My bought put is 33.50. So I'm liking the breathing room I got here. I'm earning $26 in premium, which is a 0.73% return on the week for my cash. And they're coming out of earnings, so I don't have to worry about that. So I like Alcoa Corp. I'm sticking with it this week. Additionally, last week I traded 3 put credit spreads on Lyft. I was not assigned shares, nor was I assigned on Alcoa. So, 2 successful contracts, if you will. Now we take a look at Lyft. It's down here in the red, which signifies more high risk. We're in a neutral trend, which is still okay for the wheel. However, I'm just not really digging what we got going on here this week. I took a look at Lyft on here. Just do quick research on Lyft. I believe it wasn't very favorable. So let's look at, maybe it was. Okay, so it's just about neutral when we're looking at the technical analysis for Lyft for 1 week. We still are outweighing. If we add up neutral and buy signals, we're at 17 versus 9 sell. So, Ben, not financial advice. What do you? Because now I'm on the hot seat. Now I'm maybe changing my mind live on air here. What do you think when you're taking a look at this? For you personally?
I mean, switch the chart time frame to 1 month. That'll give you an idea.
Very different. So,
downtrend over the last month. If you're trading this on wheel, not particularly the best setup for the put side.
So, okay, cool. I'm scratching Lyft. I'm going to get rid of it. I'm going to remove it. I sold 3 spreads on it last week. What I'm going to be adding is.
You said you won Lyft last week, right? You won that?
I did win. I was not assigned. I might have just missed assignment, but I was not assigned. Looking at JD, which over the last, let's call it month, has become a much more popular stock on the wheel watch list, being that it was in the #1 spot on the podium for a little while. Right now, we're at the bullish moderate. It's the best paying moderate risk stock on our watch list right now. It's trading at 30.34. We have a $1.50 spread. My strikes are 28 and 29.50, earning 0.85%, which I like. So I'm going to be adding JD to my wheel strategy this week. For anybody who hasn't seen this, 3 simple steps, you're in and you're out of here. Click add new stock, select the bot that you'd like to activate. I'll zoom in here a little bit. Select the bot that you'd like to activate, the wheel, select my stock, JD, going with 1 contract, activate, I agree, and that stock is now going to be added into my automated portfolio. Now, I have a little bit of cash still left to play with. I was going to add Paramount, but I did just notice that Paramount is reporting earnings today. I don't know if it was pre-market or if it's post, but as Ben mentioned earlier, we try to avoid, personally, I try to avoid earnings reports. Although this is kind of making me, lick my lips a little bit. It's only $1 spread, which is nice. Worst case scenario, if this put doesn't go well for me this week, I'm losing $100. Because if it drops below $10, when you still have a put spread, that's the beauty of it. If it drops below 10, I'm not taking those shares anymore. I'm honestly really thinking about it to just collect a super nice premium. It's paying 1.36% on the week, and I can run multiple. But I'm not sure on it, so I'm not going to make the decision live unless anybody in the comments wants to come in and push me one way or another. I will have a little bit of time. Just as a reminder, our wheel contracts, they don't enter until around 11 o'clock, between 11 and 12 Eastern. Okay, we let the market settle down a little bit, especially for Mondays. So I'm gonna have to make a decision, probably off air on Paramount. And you know what? Let's just look at this quickly. If we look at the analysis for Paramount on Tradier here, let's look at the 1 month chart. So we can kind of see it's been going up and down. It's now kind of just falling within a channel. It seems to have a resistance here, or a
support.
Resistance at the bottom?
Support.
Hey, again, I'm the layman. At just around really right where it's trading, around 1188, 1180, maybe a little lower. If we take a look at this, it's, well, when we take up the sell as well as the neutral and the buy, it's about a break even, but we're leaning more toward the sell. I'm going to avoid it, I guess. So I'll have to find a stock. I'm not going to just spin my wheels here for everybody live. I'll find a stock to fill up my wheel portfolio. And it might honestly be BP. I'm kind of digging this. You know what? Let's just throw it in there. BP, big company. I'm going for it. I like bullish. I like low risk, and I like when it's at the top of the watch list. So we'll see if I make any changes on that. But Ben, I did want to discuss my trend spread positions really quickly. So I have Wayfair, another stock that I traded last week, or that I've been rolling, that's not on here just because I removed it right before we came on the show, was DocuSign and Wayfair. So with DocuSign, I'm in an interesting position where it's selling a put for me. So let's find DocuSign on the watch list. In fact, yeah, here it is. So DocuSign, I'm selling a put. I rolled it again. So my expiration right now is May 3rd. My strike prices are 53 and 55. It's trading at 57.20. Thing that I was thinking about managing this contract is, this is paying a little bit lower than what I normally like to see here.
Yep.
So with a 0.27% return, maybe help me and help the audience understand, okay, what's the best time to manage in or manage out of a contract when you're on trend spread, considering it's constantly rolling for you? Is it Thursday? When's the best time to really manage this?
I mean, it depends. Like if you get into a position and immediately you're like, oh, I don't want to be in this position, like just trade out of it. And if you don't have any day trades left, if you're not a pattern day trader, then wait till the next day and then make the trade then, so you don't break any pattern day trading rules. If you want to hold the position for the course of the week and collect premium, even though it's low premium, then yeah, probably the best day to do that would be like Thursday. I mean, you could even just manually close out on the day of expiration. You would just want to turn PeakBot off, like to get that ticker off of your trend spread bot on PeakBot, so that way it just doesn't open up a new position. Right. You know, if you wanted to remove this position and then replace it with a new position that's going to earn a little bit more in premiums, then yeah, do that Monday. Close out of that new position on Monday that you opened up on Friday, and then put something new onto PeakBot, and then PeakBot will notice that you added a new ticker on a Monday if it's before 11 a.m. Eastern, and then it'll trade for you. And if for some reason you didn't get it in by 11 a.m., it'll still open a new position for you on Tuesday. So still opportunity for you to catch some premium throughout the week, and then get out of this lower earning position here.
Understood. So that's, just so everybody knows, that's most likely what I'm going to do. I'm likely going to my broker, manually close out of this contract today and get another stock in there on trend spread. The reason why is because for me with trend spread, the beauty of the strategy, and again, this is in beta testing, it'll be live in, let's call it a few weeks. I like to roll the dice a little bit more with trend spread because I know I'm not going to be assigned the shares. So I'll typically go hunting for a little bit of a higher premium on trend spread. So this is just a little low risk for me on this type of strategy. Now, I believe Wayfair moved into our removed tab here on our watch list. Just a reminder for everybody, these are still tradable stocks. They got a lot going on. They're either very high risk, or they're paying a very low premium, or even a net loss to enter. So Ben, when we take a look at Wayfair here, I am selling a call on Wayfair. My expiration is set to this week, of course. My sold call is $58. My bought call is $66.
Can you zoom in on? I can't see what the.
My apologies. So this is on the put side, but it's trading at 52.01. It's in a bearish trend,
Yep.
high risk, and we report earnings this week. So if we take a look at the call side, at least on the chart, it's 53 and 61. But for me, since I've been rolling my contract, my strikes are 58 and 66. And I don't love it, the fact that it's bearish. I'm trying to manage myself out of this position, considering that I'm reporting earnings this week.
Yeah, what you could do is put like a reminder on your calendar or something to look back on Wednesday and see where the position is at. And if you're really trying to avoid earnings, then I would close it on Wednesday, right? And then maybe you'll collect a little bit in premium, or maybe you'll have to pay a little bit back. Wayfair is typically a more volatile ticker, as we know. We've been trading Wayfair on the wheel for over a year now, so we know that there are high premiums, but that does come with high risk.
Yeah. So if we look, how often do we see this?
Yeah.
Technical analysis for Wayfair for the 1 week is a very strong sell with 16 sell signals. But again, I'm in a call, so that lines up. Here's the chart over the last month. We've just kind of been sliding here pretty consistently. In fact, okay, over the course of 3 months, it looks a little different, but we've been sliding here since end of March. So yeah, I'm going to take a closer look at some things here as we go into it. But, let's not ignore the fact that it's paying a sick premium. And I'll take a look at my position a little bit closer to see actually what I'm earning. But yeah, so I just wanted to share, the trend spread updates with everybody. Managing those positions can be a little bit more tricky than your wheel or even an iron condor. So I'm going to make some decisions there. I'm going to most likely close my DocuSign position manually. As you can see, I've already removed it from my PeakBot portfolio. I'll be adding in another stock. I'm going to shoot for something that's paying around a 1% premium on the week, and going from there. So Ben, I know we're going a little long here. I want to make sure we give people some time before the market opens, but did you want to just give a quick update? And you can say no, but did you want to just give a quick update on the new Iron Condor strategy that you've been testing, just because it's been going so well?
Yeah, I've pulled it up on Twitter here. Follow us on Twitter. You could follow the Iron Condor testing and all the results that we're reporting on Twitter. This is me personally trading this manually, this strategy. And what I'm doing here, it's actually pretty simple. At around noon every day, I'm opening up a 1 DTE Iron Condor, and I'm setting the spreads straddling the 25 delta. So I'll sell the call right above the 25, or I'll sell the contract right above the 25 delta and buy the one right below. So that creates a dollar spread, which means every condor I get into, I only need $100 to actually place that trade. And in fact, I need even less, because we can use the premium earn to offset that. So the
zoom in a little.
I've got this post open. Yep, I've got this post open. I just sent it out last night. I'll be sending out another post this morning with Friday's results in them. I'm testing this on Tradier. Tradier updates our activity log at the open of the next trading day. So for Friday's info, I have to wait till Monday morning to get that information into my activity log. So anyways, 37 days of testing. My win rate is about 62%. My gain is about $58.60. So that's a return on capital of 47.3%. And that's in almost 2 trading months. And you can see capital used. I only needed about $124 to do this every single day. And the only reason it's at $124 is because there are instances where I've got an Iron Condor from the previous day still open when I open the next day's Iron Condor. Now, the close criteria is simple. Before the market opens, I set a limit, or actually, I need to do it so I can do it live. So I just go in here. I look at the legs of my Condor. I'm going to go here, close, set a limit price of 5 cents, and then let that run. So I've got call side in. Now I'm going to do the same for the put side. 5 cents.
And for any new traders who this might be a little out of your comfort zone, schedule a call with us. We'll walk you through the strategy. We'll make sure you get comfortable. This is been performing very well, and it's going to be live and automated. Go ahead, Ben. Sorry.
So now, ideally throughout the day, both sides of the condor are going to close out at 5 cents now. If it doesn't, at 3:45 p.m. Eastern, I will hop in here. One of the legs will have closed by then. But if one has not, I'll hop in here and I will cancel that order and I will set a market order. So that way I just get out of the position, I'll take a loss and call it a day from there. So if we look at what our average is here, like I said, average win rate 62%-ish, 37 trading days, 23 days I won, 14 days I lost. The average win, $30. Average loss, $45. So when we look at that risk reward ratio there, extrapolate that over a certain amount of time, this turns into a really highly winning strategy. I would even expect that the win rate, as I do get more trades in and a larger sample size, I would expect this win rate to even increase because we are selling around the 25 delta. Usually the delta comes out to be around 26, 27, 28. So call it 28. That gives us statistically a 72% chance of winning. So we could potentially see this win rate increase about another 9% or so. I've also posted my entire activity log, so you can see all of the days that I won, all of the days that I lost, and what the win and loss amounts were. Again, that's how we calculate back to the averages. But really interesting strategy. I did note here, I wasn't always testing this on Tradier. I wish I was, because I do have a Tradier premium account, which means I pay Tradier $10 a month and there's no commission on options trades. So I can trade as many options as I want, non-index options, as many options as I want, and only have to pay that $10 per month. So I was testing on TD and I paid, I don't know if I posted it here. No, I don't think I did. I think I paid about $110 extra in fees. I would be looking at about 130% return on this strategy had I just been using Tradier the entire time. Again, because of the fees. And
also because, you're doing this on a small scale with dollar amount. If you're trading this with hundreds or thousands of dollars, those numbers change, right? Because the fees stay the same.
Well, you're saving even more if you're trading with that much, because on other brokers you're still going to be, every contract you trade, even if it's 100, that's going to be a boatload of fees.
Totally.
But with Tradier, you can trade 100 contracts on site or on queues, and it's if you're on the premium, if you have a premium account, you're still on that $10 plan. You're set.
Yeah, if you're doing more than 3 to 5 contracts a week, it's a no-brainer. It's a no-brainer to do the $10 a month.
If you don't have a Tradier account, go to usepeakbot.com/Tradier. That way they'll know we sent you, and there will be some incentives for you as a result of you creating an account through that link. So I don't know, Dillon, if you want to post that anywhere, but it's just usepeakbot.com/Tradier.
Yeah, I'll put it in the
but yeah, that's it. That's the new Iron Condor strategy. Trading it manually right now. Follow along with me. Trade it manually yourself. And, we're looking at, I'd say by the June-ish time frame for, okay, we got the link up on screen here. I'd say by the June-ish time frame, this should be available to be automated. We are working through the code changes right now. I'll be testing it on my account very soon. And then we'll start a little beta test group. We've got a couple of people that have already raised their hands to be on the beta test group. So again, if you're interested in that too, shoot us a text at the number on screen, 973-888-1166. And just let us know, hey, want to be added to the Iron Condor beta test group. We'll note you down, and then we'll contact you when it's time to start beta.
So good show. I think that's all we got. We got 15 minutes till the market opens. Just a shameless plug for ourselves. I mean, look, people, if you are trying to trade manually on top of a full-time job, on top of, you know, having a family and a social life, it's, we won't say impossible. People can do it, but we know 90% of retail traders fail because of a lack of time, strategy, and discipline. Very easy to get emotions involved, which is why Wall Street and hedge funds have been executing trades with algorithms for decades. Okay, that's all we're doing here. We're not trying to get one up on you. We're not trying to sell you some crazy algorithm that nobody's ever seen before. We take well-known strategies that have been traded for decades and we simply automate them. We're not rocket scientists here. We're just everyday guys who figured out that we were sick of losing, and let's find a way to automate and elevate our portfolios. And this is how we did it. Simple strategies, easy to use, affordable, $19 a month for a basic PeakBot subscription. Put a stock trader in your pocket. Trade as many stocks from that watch list as you can afford. We're not going to limit you. The only place we do limit you is how many contracts or spreads you can trade per stock. And that's only playing defense for you. We don't need anybody putting their whole life savings into a single stock and then getting upset at us when it doesn't go your way. Because losing is a part of the game, people. You're going to lose. There's no silver bullet here, all right? Our traders who've been with us for years know that. New traders need to know that. This isn't a silver bullet, but these are math-based strategies, probability-based. If we're going to sell the 30 delta week in and week out, we're going to, over time, get very close to that 70% win rate. So what's it come down to? It comes down to picking quality stocks that you're comfortable owning and that you feel good about in the long run. So automate your portfolio, get in, and free yourself up. We appreciate you tuning in. We'll be here same time, same place next week, 8:30 a.m. for the Pulse, all things option selling. Appreciate you, and we'll see you at the peak. Thanks so much, everybody.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.